Welcome back. You're still tuned into ET Now, and one stock that is in focus this afternoon is Quality Power, and this is on the back of an acquisition that the company has done. We now have the MD and CEO of the company, Mr. Pandyan, who's now joining us. Thank you for taking your time out and joining us here on ET Now. And let's start by talking about the acquisition. You've acquired Win-Win Specialty Insulators for about 315 crores. That's the equity enterprise value. Can you take us through what led to this acquisition and how will the acquisition benefit the company on a consolidated basis?
Good afternoon, ma'am. Thank you for having me here. Win-Win Insulators is a second avatar of WS Insulators India. This was done after a slump sale of WS Insulators to a group of investors. That is a company in Vizag. It is about 47 acres of land on a SEZ next to the new port coming up, Gangavaram Seaport. For us, it has become very critical insulators because most of our products in high voltage and HVDC, that is reactors and instrument transformers, were facing quite a bit of shortage of insulators across board, where our deliveries were getting affected. So for the main parent company, this will be a blessing, where our deliveries and competitiveness will increase. That set apart, the demand for high voltage insulators, especially at 765 kV and 800 kV DC level, is at an all-time high. Most of the factories across the world are booked for years together. This will also help alleviate some of our customer demands across the world. This company already has export references in over 55 countries and also type tests in Indian and international labs, all the credentials and approvals in multiple global utilities. It's one of the state-of-the-art factory that we were able to manage with a 50% share swap and 50% cash.
Understood. Mr. Pandyan, hi, this is Nehi also joining in. Can you quantify the kind of synergies that you're expecting to see from this acquisition, the time frame from which these benefits will start kicking in, and also can you quantify the kind of opportunity that you're seeing in the high voltage insulator segment?
So to give you an idea, one of our target segments is HVDC to build a market share inside it with the same customers that we are already selling equipments. I believe the insulators in a HVDC line, say typically an LCC line, would be another 300 to 400 crores extra per HVDC project. That is a kind of qualifications and capacity we are looking at. Our focus, again, being an SEZ factory, is in America and Europe. Already we have started trial runs in the US market, where we would like to get a much foothold. I believe the current capacity is good to go up to about 300 crores from this current factory. We are setting up gas lines here as we speak, which will ensure that the factory kicks in faster.
And what will the EBITDA margin and return on capital employed be after the full acquisition is integrated in the system?
I believe initially it should be around 10%, but over a period of a couple of years, I think we should be able to guide north of 15 to 17%, primarily because of the US market prices.
Okay, and also talk to us about the kind of benefits in terms of margins that you're expecting to see. If I take a look at your company's margins in Q4, they've come in at 10% on a year-on-year basis. We've seen a little bit of a moderation from 14.8 in the previous year. That's in Q4 of FY25. Can you talk to us about your margin guidance and your outlook over there?
No, the margin guidance have been stable. We have no reduction in margin per se. A lot of hedge income in our subsidiary gets classified as other income. So the other income is actually the impact of the inflation in the country during the quarter. So once you add the other income, and then you also have what we say a hyperinflation adjustment, which is a non-cash adjustment. We did about 85 crores in EBITDA on a sales of about 310 crores, which is equivalent to or more than 20% guidance that we had given. Our guidance last year was about 15 to 20%, and we delivered north of 20 to 23%, with also growth higher than the guidance of about 30%.
Okay, sounds good. And also, Mr. Pandyan, if you can talk to us about how the order book is shaping up, if you can give us the latest number and the outlook, any other deal wins in the pipeline?
I believe our first focus right now would be to stabilize this deal, complete the transaction and get the plant rolling in to get to the global markets. We have been flooded with customer calls for capacity reservation on the insulator front. I believe we will be the only factory which is empty at this moment for global customers, which is also an opportunity for us to get into the global market very fast. With regards to acquisition, I believe the next couple of quarters we will be slightly quieter till we complete and take over this one fully. With regards to order book, we are quite happy where we are right now. We are still taking orders, but we are also trying to ensure that we slow down the pace of order book because the price rise on commodities is slightly higher and it's not moderating. The demand is not going anywhere. So we've asked our sales guys to moderate on the order inflows. All the factories are booked out for more than a year, so we are quite comfortable at this moment.
Okay, so commodity price increase continues to remain a concern, and you've asked your salespeople to actually go ahead and lower the sales intake. But what will the guidance be for FY27 in that case? On the revenue front, you reported about 950 crore of revenue in FY26. Given that commodity cost is a concern, will margins moderate, and what will the revenue figure be?
I think we have not given any negative guidance per se at this moment. Our order book is already at about 1400 crore at the start of the year, which means we had a forward cover already for the year. What we are just moderating is what we take this quarter. Prima facie, this is to ensure that we don't book more orders and then the price keeps increasing more than what we anticipated. Some of these key commodities like aluminium and oil do not seem to be slowing down. And that's the only reason. We can always catch up the order book next quarter. The demand is still extremely strong.
Okay,
This
that's
is
good
just
to
a
know.
margin management rather than what we say, market prediction.
Okay, Mr. Pandey, good to know that demand is still robust, and we'll be watching out for that update on your order book as well. But on that note, thank you so much for your time today. So good to be speaking with you.
Thank you, ma'am.
Thank you so much. Okay, viewers, on that note, time to slip into a very short break. More conversations and more market updates lined up on the other side. Stay tuned and we'll be right back.